today is a bit different because I'm thinking more of general terms on the industry and some of, some of what I see happening within the fintech industry. This is important, especially because I think some of where I come from, Kenya and African countries in general, with the exception of Nigeria, who are doing really well on this space. We have quite a long way to go in terms of how we do our fintech. So right now, let's talk about it maybe from the process perspective. We still have a lot of ideas that don't make sense. So if you want to get credit or a loan or something of that sort, um, the idea is that you still need to provide some source of income, and that is in the form of something like a salary or a paycheck. I guess having a lot of assets would also help. However, looking at it, or at least how I see it, most young Africans don't necessarily have this kind of formal jobs, and that's okay because they are making do, they're still creating value in the market, they're engaging in the market, they're creating content, they're doing business, and a lot more that would otherwise be called as hustle. So, how do you use all of this work that you've done to still be able to get the credit that you need to scale your business? It's of course quite a bit of a problem. So it doesn't help that the banks tend to be running very slow. So an example I have here is a lot of young people are tech savvy. They tend to have some level of disposable income from whatever activities they were doing, and they do not understand why bank processes are still so slow. If I make a transaction, I've bought coffee today, why is it that I only know that of that transaction tomorrow? Now, of course, I'd say we are getting much better. For example, my bank account at Stanchart will usually send me a transaction pretty much immediately after I've swiped the card. So a lot of development there. Maybe what you're not seeing is the personalization part. Um, and I mean, so currently at the work that we do at Meta, you'd see we are in this situation where any in anything you do, the content that you see, the feed that you see on Instagram or Facebook, whatever, that's really just for you. It's content just for you. And you can, be next to your partner or your brother or your sister, and they would be seeing something completely different. So why is it in the banking hasn't really caught up? Now you might think that it's just that's an unfair comparison, but that's not true. I mean, I do travel quite a bit, and I'm getting to the point where I'm getting personalized recommendations for my travel from the airlines, from the hotels that I go to, and so on and so forth. So this is kind of spreading a lot more, and the question that now starts coming to these individuals is, you already have this data, and I mean, banks tend to have most of the data. Why are you doing anything with it? Here in the UK, for example, the challenger banks are completely changing the face of of banking, right? So they give you instead, they allow you to budget, they allow you to see how the trends in how you spend, and even give you warnings if you need. So that's something to kind of think about. So I think for us to get to where we need to go, I have started here with government and regulations, and I think that's because we don't have a good sense of how um, you cannot exclude the government when you're talking about financial systems. You just can't. And the reason for that is the government provides the backing for whatever you're doing. So an example I have is something like e-signatures. So if the government doesn't recognize e-signatures, then this is problematic. Most of the automations that you could do just can't proceed. So for example, if all transactions above, let's say, 1,000 shillings need you to go physically to the bank and sign it off, I mean, they've completely limited someone there. But if we allow more advanced ways of you giving your authorization, then we can do a lot more there. Also, on the technology side, some things need to come in there. So things like real-time settlement, and this requires maybe banks to cooperate a bit more. Need more open banking standards. I think in Kenya, for example, there's I think it's called Link, so that has allowed us to make some significant progress there. Now, how I think we are going to get there. So the first one is experimentation and then consolidation. So I think in a lot of these places we are on the experimentation side. Hopefully, eventually we'll get to consolidation. On the experimentation, we are looking at how, for example, we have multiple fintechs being started right now. Shara, for example, just bought a bank and they're thinking maybe we can do person to person transactions and see if we can find a way to push down the price of some of these products. Here in the UK, for example, we have multiple challenger banks, and the idea is one or several of these models is going to work, and then would get to some level of stability. Eventually, maybe these companies might start consolidating as they come in um, to one particular model. Anyways, my view on it is I think fintech remains an exciting space, especially in some of the newer markets. So most young savvy people talk about they're going to be maybe in India, so the Asian nations, or the African nations. So I think there's still a lot there. We are not as advanced as we could be, and I'm really excited to kind of see where that field is going to go.